Okay, so I've been getting involved in a investment club at the school. Well, I offered to help out. It's an investment club after school for the students, and it's made me think about how you introduce people to trading and the concepts involved and the step-by-step approach to learning to trade. It is a endeavor, and as always with similar things, think about uh, Tiger Woods. I know it's a terrible example. He can show you how to swing a golf club. That's how you swing the golf club. That's how you putt. That's how he can tell you everything. He can tell you in the minutest detail how you can win X many majors. Do you think for one moment you can hit one shot like Tiger Woods? Bet the answer is no. The answer is no. So why is it? Why is it that when people think of trading, they think, oh, tell me how to trade and I'll literally be able to do it? Why do they think that? The answer to that is I don't know. And maybe like Tiger Woods, he makes it look easy. Hold the club like this, swing this, and you'll be a major winner. And then you grab a golf club and you have 10 air shots. Or obviously maybe in the back of your mind you're thinking, well, he's got muscle memory, he's hit all those shots to learn, you know. And yes, that is, and it's the same in trading. You may not be physically fit, but you've made 10,000 trades, and it is no different. But anyway, let's start with the first steps. And I think the first step, just like if you're playing golf, is you go to the driving range and you try and hit a few balls. So, you want to learn to trade? Let's go to the driving range and hit a few balls. All right, welcome to your driving range. Get your browser up. We're going to type in tradingview.com/chart. Okay, we're on the range. Now, I'm just going to, that little box there, I'm just going to click it. Okay, and I'm just scrolling the mouse to bring this in. I'm just going to minimize that. Okay, so what do we got? What are we looking at? Well, so you're on the driving range and looking out 250 yards. This is your 250 yards. You've got from today, so here's the price today of the Apple. We all know Apple. We all know the Apple iPhone, the Apple iPod, the Apple Mac. This is the Apple company stock price. And it's on the right, you can see the price. If you can't, because it'll be tiny on your screen, $223 for one share of Apple stock. All right, so let me trade it. I'm going to make money. It goes up, it goes down. How hard can this be? Just like Tiger Woods. You swing up, you swing down. How hard can this be? You hit the ball, it goes 250 yards. I could be a professional. So and here is the historical price of the Apple stock. This looks straightforward. It goes up, it goes down. Yeah, this is easy. All right, well, let's hit some practice shots. Right, so this is really easy. We're not going to worry about all this stuff. We're going to just, we want to hit some shots. We want to, like when people learn the drums. Give me the drumstick. I want to hit the drum. All right. So, replay trading. Okay, so the idea of this replay is click on that replay. You should have this select bar button. So you can select date or a random bar. Let's do a date. So let's go back to like 2023. Select. 2024, let's say January the 1st. Okay, so what happens is it takes you back in time to 2023. And so we lower that. Now it's giving you how many shares you're going to buy and sell at a time. So if you're hitting golf balls on the driving range, you're probably going to like start with a 7-iron, right? So if this is your first time, let's say, let's just make it 100 shares, 101. Okay, so with your obviously because we're all expert traders, with your feel for the market, let's on the first try, we're just going to swing the golf club. So I'm just going to hit buy right here. Okay, so I'm going to start off with a position. Now let's, so you've got some options. You can play, you can fast forward, and then the replay speed. And then the interval is daily, and you can jump forward. So let's hit play and see what happens. So see, it's painting the bars, and you can pause it like that, and then do another action. So buy more shares, sell a different number, buy a different number. So I'm just going to let it play out. And in this green box here tells you how many dollars you're up or down, and then this is how many shares you have. So it's really well done platform for practicing. Now the idea of this is that you're swinging a golf club at the driving range to see what happens. So we're going to buy a few shares. This is, pretend money. We're going to sell some shares. We're swinging that golf club. Okay, so here we go. So I don't know if you can see the screen, probably not because you're watching on a mobile device, but I'm just going to let this Apple, and now this is the real price movement of Apple. So this is what really happened. So if you think you can guess what's going to happen in the future, now's your chance. We'll do this a few different ways. This way is just us swinging a club. There's then a fundamental trading approach. There's a technical trading approach. And if you go down the technical route, there are an infinite number of ways you can trade. For example, you could put moving averages all over here. You could put on technical indicators like stochastics. These are little squiggles that will come at the bottom of the chart. You can use parabolic SAR. You can use anything that can be coded behind the scenes using the price and the volume will then represent itself somewhere. And people have written these indicators. If you click on indicators here, there is an abundance of them. And people have written their own because at the time when they were developing their trading strategy, they developed all these different ways for the price to be displayed. But for us, just for this first time, we are just going to swing that golf club. So price is up. I'm going to sell half 51 because it's gone up. Just simple as that. So I've sold half. Right, let's play. See, the idea of this is like, what would you do if this was your real money? Okay, the price has gone up again. I'm going to sell 25. Whoops. So I'm nearly out of the stock already. Okay. So now I've got 24 shares left. 26. This other thing says I've got 26 shares left. I've made $638, and let's see what happens next. You'll have to watch this on a big screen, but basically the price is moving around. I'm waiting now just on pure looking to the left, the history, looking to the right, and making a judgment. Is this relatively expensive or is this relatively cheap? We're kind of mid-range right now, the price. So it's going up a little bit, so I'm thinking about selling some more. But this is how you practice. All right, and on that, I'm going to flatten. There we go, right? So I'm all out. Now let's play some more. So now I'm looking for a dip because I don't want to, as a new trader, I'm not going to sell short. I'd say that's like, if there were levels, that's like level 10. To short a stock is probably level 10. We're level 1. We're not even level 1. We're thinking about signing up for level 1. All right, so I'm looking to buy a little bit of stock on a pullback if there is one, just because then I would deem it as being relatively cheap. Okay, so far we've made $2,232, starting with 100 shares. We are approaching June, July, so we're half a year in. I can't remember what Apple's done. I don't know where the stock price is now, because obviously that would be a bias. Okay, the stock just keeps on going up. So we're at new all-time highs. I'm paying attention to that. You can move this chart around by scrolling your mouse. See, now the worst thing is here is that I'm out of this stock. And it's very difficult to buy at all-time highs. It's like buying at the peak of the market. I'd prefer a much, whoa, okay, so that was a big drop. So I'm going to buy 25. Okay, now let's see what happens next. If it drops another load, I'm going to buy another chunk. Okay, right where I bought, it's hovered. Now it's just going a little bit lower. Okay, I'm buying another 25. I'm going to try and get back up to 100 shares. But we're still a little expensive, so I don't really want to overcommit here, but I do want a position. Okay, now we're going back up all-time highs. Now the worst thing is here is that I've made money. $2,000 up. It's the worst thing you can do when you start, because if you start thinking you know something, you're in big trouble. Okay, so we're back at this. This seems to be a comfortable price. Now, if you get to know something in deep detail, let's say you're obsessed with the price of eggs, but eggs in the supermarket, let's say the price moves around a lot. Let's say they're normally 40 whatevers, right? And one day you go in and they're at 60. Are you going to buy them because they're at all-time highs, or are you going to wait because you think they'll go back down to 40? If you go in at 20, if you go in and they're 20 whatevers, are you going to buy double the amount, or are you just going to buy the regular amount? I reckon you're going to buy double the amount, if not triple, because you've never seen them before at 20. Normally, let's say the price of eggs is like 40, 41 to 45, down to 35. You know, it really moves around, but you get a really good feel for like that average price being around 40. So if they got down to 30s or 20s, you'd load up. And if they traded up at like 50, 60, if you had them, you'd sell them, right? So that's the same as trading. The worst thing, for some reason in trading, people, when stuff trades up at 60, they think they're missing out and they want to buy more. So always think about your market trader, because that's the real essence of the stock market. Okay, so let's just continue a little bit more. You get the idea here. Come and have a practice, get a feel for the market. I'm going to buy another 25. Get a feel for the market, how it moves, how basically, after 30 years of doing this, what's going to happen on the right-hand side is completely unknown. It's completely erratic. You can think a fundamental this, a news story that. They have never once printed a story before the move. They've always now. So what do I mean by that? You're like, dude, like what the hell are you talking about? In the financial papers and now online, let's say a stock price goes up 10%, right? So they'll say in the papers, such and such a company went up 10% because of a good earnings report, right? That's what they'll say. They never said before that day, if the earnings report is good, the stock price will go up 10%, because it's a 50-50 bet on it occurring. Sometimes an earnings report is good, but the market takes it as disappointing and the stock price goes down 10%. Sometimes, so what I'm saying is, sometimes good news is bad news, and sometimes bad news is good news, all because of expectations. Were the good earnings good news, or were the good earnings actually bad news because the market anticipated even better? You think I'm crazy, but once you start to follow, say, Apple or whichever stock you're choosing, you'll see what I mean. And not only are you concentrating on a company's future, you've got the backdrop of an economy. And not only an economy, world politics, geopolitics, funding, competitors, so many things will affect the stock price. And only in financial media do they print it after the occurrence. Never once has it been printed before, because it's totally unknown what's going to happen to the right of the price chart. So then you're like, okay, so how the hell do you make money if you're telling me it's completely unknown? Well, I believe that there is things can be relatively cheap and things can be relatively expensive. You need to buy them when they're relatively cheap and sell them when they're relatively expensive. And you need many of them. Take a market stall. I always think of a market stall. Guy selling fruit and veg. We've all been to him, right? He's got 30 products, and he's got his price. Now, when he goes and buys off his wholesaler, he knows the price. He knows the price of his 12 products, like that. When something's cheap, he'll buy more. When something's expensive from his wholesaler, he'll buy a little less. But he'll have a position in all his underlyings, as in all his fruits and veggies. And then when he's selling to you, he's trying to sell you for a little bit of uplift. And that's how I like to think of the market. I want a spread of investments, all different. So I want cucumbers, I want tomatoes, I want lemons, I want mango, I want bananas, all different. All companies, so they're all fruits, and they'll all kind of move up and down, but they are also independent. And then between my selection of stocks or my selection of fruits, I'm going to be buying more of the cheap, selling more of the expensive. I'm going to be blending my portfolio like this. And this is if you're going to be a trader. We'll go into the whole world of investing, dividend investing, buying rather than trading, so many things. But so that's all I've tried to do on this replay, was just buy when it was a little bit cheap, sell when it was a little bit expensive. So let's just finish it out. I think we'll go to the end of the year. Okay, so play. Okay, I'm going to sell another 25 there. Sorry, that's my first sale of this first lot. And if it pops up again, I'm going to sell another chunk. All right, I'm going to sell another 25 there. I've got 125 left. Once we get out of these, we'll call it a day. That's if we do get out of these. Okay, we're right near the highs. Basically, if it makes a high, I'm going to sell this lot. And this is my market stall approach to trading. All right, there we go. I'm going to sell there. Right. So now that's, I mean, pure fluke. Don't think I'm in any way. I mean, this is my job, but it's luck that I've made $3,437. You can see the purchases and the sales. Boom, boom, boom. And then I bought in back here when I deemed it relatively cheap, and I've sold out here when I deemed it relatively expensive. That's me swinging the golf club, hitting some shots, and kind of seeing how it goes. That is your stage one for if you like to play golf. Give it a try, see what you think. Try some other stocks, try some different strategies, try different mindsets, try different approaches. Think about my market stall idea, and if that makes sense. And then we'll move on to some more concepts next time.